If something,
Good afternoon, everybody. Thousands of apologies for the delays. I think a lot has to do with us just catching up with the technology. But I hope it's okay now. Tinashe, can you hear us loud and clear?
loud and clear, sounds perfect.
Okay, fantastic. Okay, so sorry, we have to do this again. So could you tell us a little bit about yourself? I'm having a masala tea.
Yes, I'm very much into the water, but let me give that 1 minute, I guess, introduction. So I'll start off maybe more on the professional side and maybe a little bit on the personal. So I started my career at Deloitte, was there for about 9 years. So did the typical path, started with articles, then went on to qualify as chartered accountant. Then after that, decided to go to business school. And I went to a school in France and Singapore. And there I focused a lot on technology and innovation strategy, as well as like advanced corporate finance. And then post business school, joined Siemens in what they call their Finance Excellence Program, which is essentially their CFO program. So you basically worked for the group CFO, Dr. Ralph Thomas, and on specific types of assignments. The idea was to just really get you as well-rounded in terms of understanding what it takes to sort of run like a global organization. So was in venture capital, then energy, then healthcare, in between Germany, South Africa, the US, moved a lot, 6 times in 8 years. And that's also what ended up driving me to leave Siemens, just because it wasn't sustainable. And moved mainly for family reasons, but still have a phenomenal relationship with Siemens and really enjoyed my time there. So now I'm based in South Africa, doing some advisory work, Zim in South Africa, but also, the media side of things with Money and Moves is one of the first publications, which I would say is one of the bigger passion projects I'm working on right now. But otherwise, that's essentially me. Glad to be here today.
It's a little bit about Money and Movers.
Yes, I lost you for a split second, but So Money and Moves is the publication that I guess write and where I publish all my research and writing, which a lot of has covered the retail sector. In recent times as well. Yeah. Sorry, are you able to hear me?
Okay. And give us a glimpse of your working life abroad, especially Europe versus the US.
Yeah, so it was really interesting. I think 2 distinct differences. The US is definitely much more pressure. And I think that's partly because it's like the largest market, right? So at least for healthcare, when I was there, the US is probably more than, I think about 40% of our revenue was from the US. So, and we were a listed entity. So if things weren't going right in the US, there was pretty much no way to recover, right? So there was an extremely high amount of pressure to, get things right and to make sure you were on top of things, because the numbers out of the US effectively pushed the stock price. Germany, the interesting thing I think was it was a lot more process and procedural. So I think, to some extent, the stereotype of German engineering is actually true to some extent, actually, because it did feel a lot more of a process-driven place, and people have very clear distinctions and boundaries even between work life and personal life. So you start at 8 and you finish at 6 or whatever it is, and those are very clear boundaries. I think it taught me a lot as well, because I think in Africa sometimes we mix work and social and personal business a lot, which does have its downsides. So that I would say is probably the biggest difference between the two, but both very valuable experiences across the board. Okay, I think we've had another uh, drop off here. It's the irony is, if one was superstitious, they'd say that the retail gods don't want me to say anything. So I don't know what exactly is going on, but it seems like we've had a drop off in the link again, which seems to work perfectly up until we actually start. So it's the perfect Murphy's law, right? Um, but it is what it is, as they say. Maybe we'll actually just go live on uh, on X today.
Me? Can you hear me?
Yeah, I can hear you. I was actually saying the retail gods must not want me to say anything. It's
No,
like
they don't. They clearly
I,
don't. So I
someone.
think what we're gonna do,
Yeah,
let's just get right into it, eh? Let's just get right
yeah.
into
Let's
it.
just get into it.
Because
Let's get into it.
there's something,
Yeah,
but you know what, I wanted to give a bit of background so that our audience is quite clear that you're an expert
yeah.
in these matters, and what you're talking about, you're not just talking out of the sky and just pulling numbers out of the sky, but you actually know what you're talking about, and you've looked at these matters, especially from a global perspective. And before we get in, could you just tell me why movers and shakers or why you are so prominent on X, why you feel the need, because a lot of experts don't want to get onto the public arena and express themselves on a platform like X, but you find yourself a professional and actually going out on X. Could you just give us a reason why you think that is important?
Yeah, yeah. So for me, I think from an ecosystem perspective, um, so for business to do well, there needs to be a strong ecosystem, and one of those parts of the ecosystem is the media side of things, right? So stuff like Friday Drinks is very important for the ecosystem, um, to do well, so the business can do very well, right? And I personally, I guess I've seen a little bit of a gap that there isn't enough, let's call it analysis and deep dives that's done on a lot of these companies, because our market is not yet necessarily as mature as it should be. So I felt that it's valuable to publish this, because these companies, like, these are really important companies. Like, I think we significantly underestimate how important it is for our large listed companies to do extremely well, because they create employment, they help stimulate growth. And because they're so important, it's important for us to be looking at them, analyzing them, and to some extent, I wouldn't say keeping them on their toes, but to some extent, like, encouraging them onwards, right? So, sometimes people feel like, I remember someone once said I was like a corporate hitman. Found very fascinating, right? And it's the mentality that we have, that if someone says something about a company, objectively speaking, not even critical, that it's somehow taboo to critique that. And I see things a little bit differently, and especially when my experience within the U.S. markets, where this is getting done all the time, right? There's instant 24/7 coverage about these companies happening all the time. So I think that it's a gap in the ecosystem, and I felt that it was something that I could sort of help to contribute, and a gap to potentially fill to some extent, at least. Right. I think I've lost you a little bit again, but but that's essentially the reason why I publish. And it also just happens to be something that one is passionate about, right? Writing and
Yeah.
researching, which some people just don't like to do.
No, that's true. I thoroughly enjoy your analysis, by the way, and I think that we're all better as a society with, our professionals and experts actually putting stuff out there, especially in a public fora like X. So let's just get right into it. Can you give us a bit of color of what's actually happening in the retail sector? And I'm just going to let you just go on for the next 5 minutes and just give us color exactly where we find ourselves as Zimbabwe.
I mean, I'll point to just like the data that I'm seeing, right? So just to give a little bit of context, like I always say that I'm working with public information because that's what I do. And I could be wrong or missing something in my analysis. So just to put that disclaimer. But what we are seeing, or what we have been seeing, is of course a lot of the larger retail players have been struggling because it's very hard to compete with the informal sector. And I think it's important to highlight that there's two elements, right? Because especially like on X, people are always quick to say like, these guys are incompetent, they need to innovate or die, and all those types of things. And I think, look, there is a place for that, but I think we mustn't underestimate just how difficult sometimes it is to operate when the economics of your business aren't in a favorable space, right? So I'm very slow to jump to concluding that people are incompetent and those types of things, which sometimes happens. But I mean, if you think about it from a practical perspective, the competition between the informal and the formal sector, right? If you buy something from South Africa, right? And let's say you're an informal player. Let's imagine it costs $10, right? I'm gonna jump around in terms of the numbers just to make it simple. These are not exactly they'll be roughly close, but not exactly the ones. But if you buy something from $10 from South Africa, when you actually buy something from South Africa, you don't get charged VAT. So if it costs $10, you're gonna, let's call it $100. If it costs $100, you're gonna get it for 85, right? Because there's the VAT taken out. So if you then are able to also avoid duty by smuggling that thing, right? You're saving the $15 on the South African side, and then when you cross the border, you're also saving another, $15 from the VAT side. So and then you've also saved on the duties, right? So your landed price of a particular product in Zim, if you go the informal smuggling route, whatever it is massively lower than if someone is in the formal channels, because they're obviously gonna have to pay the duty, they're gonna have to sell it for VAT. So they have a massive advantage if you're dealing with like dry goods, right? Where it's, like for like, people don't care if you're buying in place A or place B. So they've got a massive advantage, which is very hard to compete against, right? And then that obviously then means that the margins are eroded, the volumes drop, and it becomes very hard to compete with the informal market. Also, when you consider that in the informal market, you're dealing with cash, so there's a little bit less risk from a currency perspective. And also, you have less of the bank charges and some of those other elements as well. So I think in terms of like let's call it a macro trend, the rise of the informal market has seemingly been a big factor. Just another data point that sort of touches on this is that if you took the market cap of like your four formal retailers, so there were like four pure retailers in listed retailers in Zim, which was Edgar's, Truworths, OK Zimbabwe, and TM Pick and Pay. TM Pick and Pay is part of Meekles, so you kind of have to do a bit of calculations. But effectively, if you took those four and you compared their market cap at 2014 to the beginning of this year, OK Zimbabwe was down over 90%. Edgar's was above 80%. Truworths, you could actually say, is like 100% down because it actually ended up getting into corporate rescue. It was only TM that actually had maybe a drop of about 20 to 30%. I can't exactly remember. But that just shows you that like there's been a massive issue across the board when it comes to formal retail. So the general trend has been that it's been on the downside. And a lot of that is to do with some of those factors about the rise of the informal market, and some of the challenges with currency, because we do also see that when the currency is stable, formal retailers tend to do much better, and when it's not, they tend to struggle, which was exactly what we saw in the 2008 2009. And then when dollarization happened, if you look at the market price of like OK Zimbabwe between 2009 and 2014, it actually was one of the best performing stocks during that time. And in fact, I think in 2014 or 2015, it was the fifth largest
So,
company,
Tinashe,
bigger than Old Mutual. Yeah.
so I hear you, and I think what you're saying is true of the listed entities, but we have a lot more retailers and wholesalers who are not listed who have thrived. I mean, if you walk along Harare Drive, you see a lot of retailers that are not listed, but they've done well. And you have a number of unlisted formal retailers that have actually done well. What is your view on that?
I mean, so from the research I've looked at, and this is pretty recent, the the one that I guess I've covered most recently is, of course, like your food lovers, particularly the one in Greendale, which seems to have done pretty well. In fact, they're expanding. I think their new store is close to an acre or something like that. And it's a combination. It's a combination of things. It looks like, right? Obviously, pricing is one of the topics that they seem to have done very well. Very good customer service, but they also, I think, have had a unique advantage of focusing on the fresh food segment, because that's something that the informal market can't really do, right? Or rather, it's very hard for an informal player to compete with someone who's very good at that, right? Because if you're in the higher income category and you want fresh food, you're not going to go to a random store, right? You're going to go to some place where they've got standards. They're actually required to comply with certain regulations, and where you can be guaranteed to get quality. And of course, once you've walked through the door, it's then easier for someone to buy other things as well. So there's been a trend of, I guess, like a lot of these fresh food stores, seemingly boutique, that have been coming up. And I think that attraction of like fresh, high quality produce has been looks like for the players. And so those are the
Okay.
guys who seem to be doing well. Yeah.
All right. Can you hear me?
Yeah, I can hear you.
Tinashe, can you hear
Hello?
me?
Yeah. Yeah, I can hear you now. Yeah. I don't know if it's maybe you're struggling to hear me, but I can still hear you
Okay.
quite
Tinashe, can you hear
clearly
me?
on my side. Yeah, I can. I don't know
Gents, what's happening? Wizzy? Patrick?
Yeah, I think the sound must have.
Can you hear me?
Um,
Yeah.
I can still hear
I
you
can hear
quite
you
clearly.
now. Okay. Right.
Okay.
Okay. So there's food lovers, which is true as far as the fresh food, fresh vegetables are concerned, but you still have dry goods. If you look at the Insco group, Gaines, I think they're actually occupying what used to be a lot of Metro Pitch and N Richards. They've taken over those outlets, and they seem to be doing okay. But you also have the hardware stores right across Zimbabwe. They're growing, and they're doing so, profitably. So this idea that is just moving goods across the border or siphoning goods across the border, how come it's not affecting the hardware guys? Because the hardware guys are actually increasing their footprint right across the country, and this isn't the formal business.
That's a very good question. It's a very interesting hypothesis to look at. I mean, off the top of my head, right, and we'll need to sort of dig into the data. I think, like, for specialized goods, right, specialized goods solve a different type of a problem, right? Because I always like to think about, like, the job to be done framework in terms of, like, what problem does a store actually solve to try to understand why they're in that situation, right? If you think about a retail store, the fundamental problem it solves is pretty much like space, because you can't have a year's worth of supplies in your house, right? So if somebody can give you that same good at a cheaper price, you're more likely to just switch, right? But if you think about like a hardware store, yes, you need to. It's a little bit more specialized because you're trying to solve a problem. Let's say, for example, something is broken in your house, or you need solar, and a lot of that stuff is a little bit more technical that someone wouldn't necessarily be knowledgeable in terms of how to do that. So there's a little bit more of an incentive to go to a store that's formalized, where you can guarantee that what you're getting is going to work, right? Whereas with toilet paper, it's going to work. You know what I mean? So I think for like your hardware stores, they're solving a little bit of a different problem than your typical retail, which is why maybe they've been a bit more resilient to the informal market in that regard. But look, it's a very good question in terms of why that hasn't been as affected.
Then could you continue? Could you continue with that analysis and thesis? And when you look at car parts, because we know that when you go to Kagui and Harare streets, those are your informal car parts that are traded there. But you still have Transerve and the formal guys who are also doing well. That market seems to be segmented, and you've nicely articulated to the pain points that they address. But it seems like both are doing well in car parts. Even when you look at your service kits, I think they seem to be doing well, the formal guys. But equally are the informal guys doing well. They seem to live very well together. How do you explain that?
So doing well is also a little bit of it's relative. And off the top of my head, amongst the, I'm just trying to remember the valuation I did. Off the top of my head, among the, let's call it in-score and ex-core companies, I think Axia had the most challenges amongst them, right? Which I think is where Transurf sits. So I'm not sure if I would say that it's like a perfectly symbiotic relationship and they're doing as well as they used to do before. I think we'll need to get the data on that. But yet again, if you also think of it from an import perspective, that's a good question. I'm not 100% sure that it's a symbiotic relationship, but I wouldn't be able to speak to the car parts specifically in that particular industry because it's not one of those areas that I've done extensive research on. But I think that would be a good hypothesis to try to figure out like what exactly is happening in that particular space.
Okay.
Right?
Yeah. All right, but thanks for that. Then the natural question is, if you look at the retail and wholesale sector, that's now contributing, if you're using current prices, about 23% of our GDP, which is higher than agriculture and mining combined. So clearly there's a lot of dollars moving there. But when you look at our manufacturing sector, it's struggling. It's less than 11%. Why is that? What are you telling us that we're importing a lot of our goods and services, and why are we not using the local manufacturers? What could be the problem there?
Well, we like cheap things. It is a big problem, but we like cheap things. And we also have brand associations with things that are foreign as premium, right? Because there's a lot of categories where we have manufacturers who are able to, produce those goods, but we still get a lot of stuff from South Africa, and I think it's a huge problem, because what also happens is like South Africa is also struggling. If you look at South Africa's GDP growth, it's been pretty much flat for the last, couple of years, and so a lot of pushing that growth is trying to get product outside of South Africa into places like Zimbabwe, and they can afford to really cut down the prices because they've got obviously excess capacity, and secondly, they're able to get US dollars, right, which is very, very, very valuable in general. So the incentivization to be a trading country where you just buying and selling is very hard, and of course manufacturing, you have to deal with power cuts, you have to deal with compliance, you have to deal with the regulations. So sometimes the environment isn't as incentivized for people to manufacture, unfortunately. And that's a big problem. Because manufacturing is really where you can start to grow an economy, especially if you're, less advanced economies like Zimbabwe. You really have to be strong in in things like manufacturing.
No, fair enough. Let's now zoom in and let's take Pick and Pay as an example. And you're an accountant, so you'll be able to help us understand this. I think in the news recently, they made a 5 million rand loss, and then they wrote off or impaired the Zim operations. Could you explain to us what that actually means and what?
Yeah. So this is an interesting one, and this is also part of the reason why. Sorry, excuse me. It's part of the reason why I started to write a little bit more, because, and I understand it's very difficult sometimes to explain something. That Pick and Pay story that came out in the news was not really reflective of what has happened. And look, I get why it was reported that way, and I understand, and I don't think it was anything of malice. But here's what happened. So the impairment, which happens when you effectively write off an investment to zero, didn't actually take place this year. It took place last year, right? And a lot of the times why that happens, especially in the case with Zim, is not always because they see that the investment is not valuable, but because Zim reporting in ZWL, if you're a company in South Africa and you have an investment which is giving you numbers in ZIG or ZWL, can be very complicated because of all of the currency issues. It's not much a nightmare. So sometimes they actually just decide, let's just write this thing off so we don't have to deal with the accounting nightmare, right? And if you look at that story, it says that there was a big swing, right, from last year where there was a profit to this year where there was, I think, minus 51 million rand loss. But if you actually look at the actual financial statements and you look at the note, last year there actually was also a loss, right? A smaller one, but I think it was 37 million. The profit was because of a monetary adjustment, which is basically an accounting adjustment because of all the hyperinflation drama. So if you actually strip that away, not much change between last year and this year. And to some extent, it's probably a non-story. And I would even say that there's a good chance that Pick and Pay is doing much better today than it was doing 12 months ago, right? Because if you look at Pick and Pay, generally when the currency is more stable, right, they tend to do better, right? That's generally been the case. So I would actually say that story was the details were there, but like the nuance wasn't pretty much captured up. And I actually think Pick and Pay is probably doing better than it was last year. And I would even say it's probably doing better than Pick and Pay South Africa, because they're having a really tough time, which might sound a little bit crazy, but yeah.
So it's just a story that's behind the curve.
Yes, like it was not even necessary to report on that because everything happened last year. and there hasn't really been much change. But it is what it is.
Okay, so I suppose the more philosophical question that we need to ask you, because you look at these numbers, is do these numbers actually make sense, or is just gibberish? How do you make sense of everything that's actually happening? How do you know that it's quite reflective of what's actually on the ground?
First of all, it's incredibly hard. Like I remember once writing the best way to look at ZWL numbers is with your eyes closed, right? Because sometimes reading them and trying to interpret them actually can confuse you more. If you recall, I think 6, 7, 8 months ago, there was a period where OK had their revenue went up 29%, hyperinflation numbers, which on the surface you say, oh, that sounds fantastic. But if you looked at that same report, their volumes went down 29%. So revenue went up 29%, but volumes went down 29%. How does that make sense, right? And it doesn't. So generally speaking, for me personally, when looking at ZWL numbers, I try to look for indicators of performance rather than the actual numbers. So things like volumes, maybe units sold, the credit terms, how much debt they have. But honestly, it's very difficult reading ZWL numbers. Extremely difficult.
And in line with that, what are you seeing in terms of trends? Do you think that margins are increasing, or volumes are increasing because we're actually reducing companies are actually reducing their prices? How are they going about increasing volumes? Because we hear that story, across the country, especially in the retailers, where they will tell us that the volumes are increasing. Even in the manufacturers as well, they will tell us that the volumes are increasing. But is that volume driven by decrease in price, or it's really same price and demand is actually increased?
So what's really interesting, and I think of one of the case studies that we should look at, and I've been trying to crack my head over this for a long time, is if you look at Delta's volumes, right? So if you plot a graph of Delta's volumes and the GDP, they generally move quite close together, which makes sense because Delta's the biggest listed or locally listed company in the country, and stuff like beer and soft drinks is sort of like a day-to-day staple. And if you look at their volumes, they've actually been increasing consistently. And then when Varun came into the market, you would think, okay, well, Varun has come in, they're going to steal a lot of market share, Delta's volumes are going to decrease. They kept going up. And in fact, both Varun and Delta's volumes actually went up. So, and if you look at the official numbers, GDP kind of sort of flatlined, right? So there's a couple of things that could be going on. One is there's a lot more money floating around somewhere than we actually know, right? Maybe it's because the economy's become more informalized, but at least on a household consumption perspective, there's actually much more demand than we assume, right? Sometimes we assume that there's not enough customers, but actually sometimes there's not enough product getting to particular customers. Now, that's not in all segments, but I do think that applies. And the same is if you look at InScore, for example, when they increase their capital investment, their volumes have also been just going up, right? So there does seem to be certain segments of the market or certain businesses where actually there is a lot more demand than we anticipate. And so there's
but is that not confusing? Is that not confusing? So, for example, if you look at Delta numbers and you focus purely on volumes, then you need to consider the product mix. That where is that volume actually coming from? And also, is it driven by price? Because it could be that they've actually been reducing their price to boost the volume.
Well, so there definitely was a decrease in price, right? Especially with because when Varun came in, they also went from an undercutting perspective. So there was definitely a decrease in price, but that alone cannot be what has driven the volume growth both in Varun and in Delta, right? There must have been some underlying demand that was not being met. And it seems to apply to the real hardcore basics, right? So like in Score, the stuff they make is like the hardcore, stuff that you eat on a day-to-day basis. Delta is the same thing, stuff that you drink on a day-to-day basis. So on that like basic necessity level, it seems like there's actually a lot more demand than we think. And it sounds confusing, it probably is, but it's the numbers. The numbers seem to point that. Now, I will say the last financial year, it seems to have dropped off a little bit. But if you look at the general trend over the last few years, there has been an increase in demand, especially within those the products that those companies sell.
Okay. All right. And then maybe just to close off, because I know that we've had technical challenges and we need to actually do this in the studio at some point that we really get into the weeds. But if so from a macro perspective, I would say that what's driving the demand, especially in the retail and wholesale sector, would be the diasporan funds that are flowing in. If you think about it on a month-to-month basis, that's close to 200 to 250 million US dollars. That's directly affecting our retail and wholesale market. My question to you is, how sustainable is that? Are we likely to see it being driven by, that latent demand coming from diasporan remittances? And what happens if there's a global change or for whatever reason the remittances stop? Or do you think that this is now baked in, that Zimbabwe will always be driven by remittances?
That's a really good question, actually. And I think that's a really interesting piece of data to look at. I think that's going to be on my to-do list, to try to plot how remittance growth has correlated with the revenue of certain companies. And then let's say, assuming that's the case, that the volumes is coming from remittances, like you're saying, then obviously that's a big risk, right? Because if there's a global downturn, right, the people who are the remitters of cash are likely to send less money, right? And that would probably, significantly impact the volumes. And maybe that's what's already happening right now, right? Because, like I said, the last financial year was a little bit weaker than the previous ones.
Than previous years.
And also, it seems like globally there's a little bit more jitteriness about what's happening, especially with the trade topic. I know Jamie Dimon, so the CEO of JP Morgan Chase, was saying that, look, we haven't actually felt what the impact of this tariffs back and forth has been. And, the stock market is still flying, but maybe that's just because of lazy capital allocation rather than inherent strength globally. So big risk, a very big risk, and really one to keep a look at. It's a really good data point to check.
And then the informal traders, because you understand the margins. Do you think that it's sustainable? Is it sustenance or subsistence, or these guys are actually making money and it could be the future of our retail sector? Could you just inform us of what's actually happening in the informal sector?
I mean, I definitely wouldn't. The informal sector. I always try to look at stuff with as much data as possible, right? And I never want to, overreach in a sense. So the informal sector is very difficult because it's very fragmented. And sometimes what we call informal sector, in the top of our heads we think of a tuck shop, right? But some of what is informal is actually pretty established stores in a sense. Not your large chains, of course, but stores that just are trading in an informal manner. And I think that is going to be a hard trend to reverse. However, I will say that we should not write off the formal traders, the formal retail market yet. And I'll take us back to 2008. If you go and read even OK's even Pick and Pay, but maybe more so OK. I think specifically that's one I covered. If you read the 2008-2009 annual report and the comments by the CEO, former CEO, but now also current CEO, he sort of describes the situation we have right now, right? The rise of informal traders, issues with currency, so forth, so forth, so forth, right? As soon as we stabilized and things got more normal, the fastest recovery was actually from the formal traders, from the formal retail players. They did extremely well between that like 2010, 2013.
Yeah, dollarized
I
year.
think
Yeah.
dollarized, yes. So I think we shouldn't write them off. And I think as soon as there is a little bit more, let's call it retail stability, right? I'll localize it to that sector. They're going to come back, and they're going to come back pretty strong. So I think the informal trade will
I
still
like your
remain.
distinction. There's a particular distinction that you've made, which I quite like, and which I actually think is actually dangerous for our country. So you make the distinction between informal traders who are like your tuck shops, and then people who are choosing to trade informally.
Yeah.
And that distinction, I think, is very important, because how do we reverse that? Because what happened in 2008 and 2009 is that people actually wanted to trade formally, because then they could plug into the financial services sector, and there were benefits to getting money from outside investors to come in. And I think OK was one country that actually benefited from it. So the question that I want you to maybe make the distinction is how do we change people from wanting to trade informally to wanting to trade formally again and plug into the financial services sector?
That's a really good question. That's a really good question. I don't know if I have a holistic answer to that. But stability is probably the. I always say, like, I was saying that Zimbabweans have a disease called HIT, right, which is hyperinflation-induced trauma, right, and we all have got hit in a sense, and I think like the fact that people want to use US dollars so much, right, makes people want to informalize, and sort of, because a lot of the times if you actually hear people pushing product towards the informal market, they'll tell you it's because we want to get USD sales, right? And so that currency confidence topic is going to be a key one, and I think somehow we in some way to be able to have more people go back to wanting to be formalized, and maybe also reduce some of the, so the taxation is a little bit on the high side in some cases. But yeah, that's what I think is probably needed. But it's probably more a host of other topics that need to be addressed, and maybe also sometimes incentives, right? Because if I looked at sometimes what we tend to do is, rather than make it easier for formal players, we try to make it harder for informal players, right? And maybe sometimes we need to consider switching that up and actually trying to create an environment that's a little bit more easier for someone to be formal than harder for someone to be informal. Yeah.
Thanks for that,
I think that could be
before we
starting
go,
point
before we go, thanks for that, before we go, let's just talk about Trump and what's happening with Elon and Trump. What's your perspective? What do you think? People want to know.
Most of my stock portfolio based in the US, so I've been watching very closely. I think it was inevitable. It's very hard to have two very big characters, trying to call the shots. So I think it was inevitable that there would be a fallout. I think it'll be interesting to see what happens next, because to some extent, while Elon Musk is the richest person in the world, Trump really seems to hold more of the cards, right? He has a mandate for the next 3.5 years already. Any damage that Elon Musk could do is probably more in the long term, whereas Trump's policies and his directions can affect Tesla and Elon's businesses, today, which is why I guess we saw that 14, 15% drop in the stock price yesterday. So it'll be really interesting to see how it plays out. I think they will sort of try to reconcile to some extent. I don't think this full-out warfare will continue because it's a zero-sum game for both of them, and I don't think anyone sort of wins with that. But it will also be interesting to see if this makes it easier to walk back, at least for South Africa, some of the narrative that Mr. Musk had been painting about South Africa. And so maybe it's an opportunity to try to change the narrative.
Yeah. There are some who are arguing that it's 4D chess being played out. What's your perspective on that?
No, I always find this 4D chess thing very interesting. I think people overrate how smart people are, right? Like a lot of these people they're brilliant, but like they're not thinking that far ahead, right? Like, this is two egos clashing. And it was inevitable. It was going to happen. So I don't see much 4D chess. In fact, I've actually been a little bit... Trump's back and forth has actually made me downgrade his chess level a little bit of late. But yeah.
Well, it will be very interesting. But Tinashe, this was great. We need to do more of this. I thoroughly enjoyed this. And to the viewers, sorry again for the delays and the technical hiccups that we experienced. But I think it was worth it at the end of the day. I think this was very useful. I certainly learned a lot. And I actually look forward to doing another deep dive because I think there's a lot that we need to speak into and speak to, specifically with the retail sector, which is the largest GDP contributor in Zimbabwe. Everyone else, thank you very much for the comments and for the support. Have yourself a wonderful Friday and a wonderful weekend. Cheers.
Yes, thanks. Thanks for having me.
Thanks, Tinashe.